Okay, that's great. So let's start without further ado. Yeah. So we're going to be starting from basis of assessment. Like I explained in the last class, we are going to be talking about some, should I say, definitions that will make it easier for us to understand what basis of assessment is and how this links to what we are going to be doing in taxation. So first, let's talk about the accounting year. So the accounting year is the period covered by the financial statement of a company. So a company would choose their own accounting year. They want the accounting year to run from January to December every year, June to July, I think April to May. No, you can choose your accounting year. And remember that this accounting year is for accounting purpose only. So now accounting period is similar to accounting year, or should I say almost the same. But the difference is that while accounting year is an entire year, that is 12 months, accounting period is a period that is less than or greater than 12 months. So when you have a particular financial statement that covers, for example, 9 months, it is no longer a statement of profit or loss for the year ended. It will become for the period this. For the period, when you see a financial statement that has the word period instead of year, it means that the period that that particular statement covers is not up to 12 months or is more than 12 months. Then let's move to what we call assessment year or year of assessment. This is the period to be taxed by the authorities, and sometimes it differs from the accounting period or accounting year. So now we're talking about government fiscal like period or fiscal year from January to December, or we can call it the income tax year. So in a layman word, we can say that this is the time that the government wants to tax you. No, you have chosen your time by saying accounting year, accounting period. Government will not choose their time that they want to tax you. So you've done your financial statement, you have your financial statement with you. So now government want to tax that financial statement. The year that the government decide to tax you is the year of assessment. Just say government tax year for you, something like that, right? Then the assessable profit is the profit that we want to charge to tax. The profit to be charged to tax. That's the accessible profits. I hope you all understand this definition. So now, why are we having this definition? It's just to let us know that accounting profit that we know as net profit or profit for the year differs from what? The accessible profits. You know, like I said, that accessible profit is the profit that we are charging to tax, right? But this profit differs from accounting profits. Why? There are some expenses that are allowable under accounting, the normal financial statement. But in the tax realm, these expenses are not allowable. So in the process, you adjust your accounting profit. That's why after adjusting, what you get is an adjusted profit. I don't know if I'm making sense. So you these expenses that we allow in the tax realm, but taxation disallow, you remove them. You remove some expenses, you add back some expenses, you remove some income, and so on and so forth. We are going to get there by God's grace. So afterwards, it is called an adjusted profit. Right. So like I've said before, accounting year can differ from what assessment year. It depends on like the particular situation that you find yourself. Now, because we cannot use accounting profit for adjusted profit, and adjusted profit also differs from accessible profit, because adjusted profit follows the accounting period. To now like adjust the adjusted profit to follow the accessible year or year of assessment, that is what is called basis of assessment. Basis of assessment. Now let me repeat that. We have the accounting profit. We adjust the accounting profit to fit taxation. Then we get the what? Adjusted profit. But remember that adjusted profit follows what? The tax timeline. We now want to change that timeline to what? Sorry, it follows the accounting timeline. We want to change the accounting timeline to the tax timeline. That is where what? Basis of assessment falls into place. Now, we should take note that an existing business is a business that is not ceasing anytime soon. Like you're not You are not closing down anytime soon. And you did not just start your business. You did not just commence. You've been in existence, right? It's taxed on preceding year basis. Now, what preceding year basis means is that the tax of this year, the profit of this year is taxed the following year. The profit of last year is taxed this year. That is what we call preceding. That's why it's called preceding. Preceding means what? Previous, like last one. So profit of last year is taxed what this year. Remember that we have to make a profit before government can tax what? The profit. So that's how it goes. Now we have actual year basis as well. And the actual year basis, it means that profit of this year is taxed what? This year. Like if you make profit from January to December, you're also going to be taxed January to December. I don't know whether you get. And like I said in the last class, sorry, please let me take a little water break. Sorry, I'm sipping hot water so that I can speak more clearly. All right, so let's get back to what we were talking about. So yeah, I already talked about the preceding year basis, the actual year basis. So now the note here is to bring our attention to the fact that we have to be careful of the year of assessment when we are computing taxes, right? Because remember, we have finance acts, we have 2019, I think we have 2022 and 2023. So now, assessment year from 2021 will be based on Finance Act 2019, while the years below 2021 will follow their specific requirements, which means it will follow the like preceding laws or rules before Finance Act 2019 came to change it. When we like proceed, you will see the difference in what we are talking about. But just note that when you have 2021 above 2021, 2022, remember what is there is an assessment year, not accounting year. Oh. Remember, that's if you are talking about the tax year, not accounting year. So because on the group I saw somebody said 2019. It's not 2019, oh, it's 2021. And so I'm supposed to arrest that person, but it's a pity that I cannot see that person and arrest the person. Sha. So that's it. I've corrected. You know yourself. You are on this call. I've corrected you like that. So now, types of basis of assessment. You have the normal basis and the abnormal basis. The normal basis is just, it pertains to an existing business, actually. That's when you have the normal period of 12 months. There's no deduction and no increment. It's 12 months, right? And is, yeah, like I said, it pertains to an existing business, which means the business will be taxed on what preceding year basis. Then they have the abnormal basis. The abnormal basis is just like the period one. It means that the period covered in the statement that we're about to like tax is either more or less than 12 months. Is either more or less than 12 months. And the type of businesses that fall under this are what? The commencement of a new business, change in accounting date, and what? And cessation. So now let's talk about commencement of a business. Okay. So now to commence a business, when you commence a business, sorry, is there's high chance that your financial statement, your first financial statement, would not have a 12 month. For example, what if you commence like April, or you commence May, or you commence August February, those kind of dates that differs from January. And for example, if you commence February and your accounting period end is like December, so it means that your financial statement will be covering what? February to December. I don't know if you get me. So now it means that you are falling under the abnormal basis of assessment. It means you are falling under the abnormal basis of assessment. So now, if you want to tax that kind of business, we have a rule, right? Like I said, the Finance Act 2019 changed some things. That's why we have old rule underneath. We are going to be talking about the new rule first because that's what will follow. We're going to be talking about the new rule first. And the new rule is very simple. In fact, it made things very easy. Why do we have the new rule? It's basically because there are gaps and overlaps in the old rule. When we talk about the old rule, I would tell you why there are gaps and overlapping in the old rule. And gap means that there will be a period of time that the profit made within that period would not be taxed. And there will be a period of time that the profit made within that period will be taxed more than once. That's overlapping. So this new rule has come to like change everything so that there's no gap and there'll be no overlapping. Please, who is that? Kindly mute your mic. Thank you. So now, for the first year of a business that just commenced, the first year of that business, the accessible profit is going to be the profit from the date of commencement to the date of the first accounting period. Remember, date of commencement to the date of the first accounting period. Date of commencement to the date of the first accounting period. So now let's take the example here. ABZ Limited started business on what? 5th of May 2025. And its accounting year end is December 31st every year, right? So let me use Excel here to make things more easier. Sorry, please. Sorry for that. Okay, so let me put it here so that we can see it better. We have year of assessment. YOA means year of assessment. Then we have what? Basis period. Basis period. Then we have what? Accessible profit. Accessible profit. Okay. So let me use this place for like notes. According to the question now, the business started operation May. And it is very important that you note that if a business should register their, let's say they register their name or their operation, it does not mean the same thing as commencing operation. No. I can register my business in 2025 and start operation 2027. If I have not started, I have not started. None yet. At least government will not, they will not come and tell me to give them profit that I did not make. If I have not started business, it means I have not started business. There's a difference between what? Registering your business and commencing business. Please, if the questions talk about registering business, just overlook that date. Is like noise making factor. It has no meaning. The date that the business commence is what is important to you. The commencement date, when the business commenced, not when the business was what? Registered. So now the business commenced May 5, 2025. And the first rule says that what? The first rule says from the date of commencement, which is 5th of what? May 2025 to the end of the first accounting period. What is the accounting period here? The accounting period is what? December 31st every year. Sorry. So December 31st will be what? 12 31st 2020 what? 5. 12 31st. Let me change this to date so that it's going to be easier for us to see. So I want to repeat this particular one, and it follows preceding year basis. Remember, preceding year basis means, why is it not doing? Preceding year basis means that, why is it not doing? Profits of last year will be charged to tax this year. And if you are following that particular format, it means that whatever year that is in your basis period must not show. Why is this thing not doing? Okay, because I have two dates. Sorry. I'm not supposed to have two dates in a single file.
Now you
Okay.
can merge it.
I will just put it here. Let me insert cell. Okay, so to
31st.
31st, yes. We have 31st December 25. So the base period will cover that particular cell. Let us, okay. So this for basis period. Okay. Or maybe I just write to here. But this place is supposed to be a dash. Oh. I don't have a whiteboard. Assuming my laptop has pen now, I would have showed a noteboard and they will write on the noteboard, but there's no way I can do that. So now, I guess this basis period is like understood. Let me come again now. So now, this basis period, we are saying that the first year of assessment, basis period for the first year of assessment, the assessable profits. Remember that I said that adjusted profits follow what? Accounting date. Assessable profit follows what? Tax date. That tax date that we want to follow is what we are trying to determine here. We are trying to determine what? The tax date. So now, the law now says that you are going to choose the profit from what? The date of commencement to the end of the first accounting period. Not the end of the year, end of the first accounting period. The reason why this one is 31st December is because the business itself has chosen 31st December as its what accounting year end. So now, because you are using PYB, the year of assessment here will be 2026. Year of assessment year 2026. The year that is in this one, this last place, 2025, must not show in this year of assessment. Since we have established the fact that profit of last year would be assessed to tax this year. I think we have established that fact. So it means that you cannot write 2025 in your basis period and say that we are taxing the same profit in 2025 is not possible if you are following the PYB. So it has to be what? The next year. I hope you understand this. I hope you understand it. So now the second year, the rule says that the assessable profit of the second year will be profits from the second day after the first accounting period to the next accounting period. What are they saying? Let's experiment it. So now the second what year will not be the what? The next day after this date. This 31st December. The day after it. What is the day after it? That is what? 1st of what? January. 1st of January, which year? 2026. Two, the next accounting year end will be what? 31st December 2026. So now what will be the year of assessment? Remember, preceding year basis. The year that shows in this must not show in this. So our year is of 2027. So now let's talk about the third year. Let's talk about the third year. It says third year till year three till eternity. It says profits from the second day after the last accounting period to the end of the next accounting period is the same thing as year two. What is the second day after this date? The second day after this date. So we have 1st of January 2027 to 31st December 2027. And the year of assessment year will be what? 2028. Please, are we good? Let me look at your faces. Are we good? You have questions. I'm coming. I know that you guys will have questions. So I think, I don't know if I can see. Rosemary, your question first, please. Unmute and speak. Rosemary, are you there? You can speak. Rosemary,
Hello, who is Rosemary?
I think the second person should speak. I don't think either she cannot hear us or network issue. Maureen, you can speak. I think Rosemary is not available. You can ask your question.
Okay, ma. Good evening, ma.
Good evening.
Sorry, I'm a bit confused. You talked about the old rule and the new rule. Please,
Yes.
don't be offended. Which one is the new rule, please?
I've not touched the old rule at all. What we are doing, what I just
Mm.
taught is the new rule.
Okay, thank you, ma.
Yeah, you're welcome. So, do we all understand the new rule?
Sorry, ma, I wanted to ask something.
Okay.
The new rule, is it like the new tax law or something? Is
It has
it?
been in existence for quite a while. It came in with the Finance Act 2019.
Oh, okay. Okay,
Yeah, so
fine.
that's what
Thank
you are
you.
expected to use currently. As long as the assessment year is 2021 above. So, but below 2021, you are expected to use the old rule. Though I know I will not give you old rule question actually, but it's to be on the safer side. That's why I just want to teach you. Temilade, your hand. Ah, Sally, what? Sorry, Temilade, let Sally go first. Maureen, you can put down your hand. I think you already
Ma,
spoke.
just like the question I asked in the other class, like if we start business November 1st, using the new rule, that means you are starting because we are almost at the end of the accounting year. So that means you are going to prepare your account from 1st of November to 31st of December, which is 1 month, using the new
That will
rule.
be 2 months. 1st of November. So that will be 1st of November. Can
Yes,
you see
that
my
will be
screen?
2 months.
Let's say
Yes, yes,
2025 to 31st of December, abi?
yes,
2025. So
yes.
this will be how many months? 2 months. So now this is how we are going to compute it. And your year of assessment will be what? 2026.
6.
That is the law. You follow it to the core.
So are they going to charge tax for that 2 months?
Yes, now, because the financial statement might cover, like, let's say 14 months. Do you get? What you now do in that case, under this accessible profit, what you will do is to prorate. So it's going to be, let's assume that the total profit for the 14 months, sorry, let me delete this. Let's assume the total profit for the 14 months is 500,000, 500,000 naira. And we have 2 months basis period. What you now do is
We
to
are
do
not
what? Is
seeing
to
the screen.
prorate. I cannot see my screen.
Mm.
I think
Maybe it's your network.
that will be your network because my there's nothing wrong with my network and it's
Maybe
going.
it's her network. Maybe it's her network.
Yeah. Okay, so I was talking about proration. This is 2 months, but 500,000 is profit for 14 months. What do you do? Equals to, you open your bracket, 2 divided by 14 multiply by this 500,000, enter. So this is the profit that they are going to charge to what? 30% tax. Please, do you understand?
Yes, I understand. Which means that the tax will not be charged that December ending of the accounting year. So it's going to be charged after 12 months.
It's
That
not
means I'm going
after
to add
12
that
months,
2 months.
so
12 months, that's 14.
no, listen to me.
All
This
right.
500,000 is for what? For 14 months, right? 14 months. But
Please,
this
ma'am,
money,
let Rosemary mute her mic, please.
Rosemary, what's happening? Okay, thank you for doing that. I wanted to mute you before. Thank you. So now I established the fact that 500,000 is for 14 months. But this amount that we have calculated here is only for 2 months. Don't forget. It's only for two months. So it means that if we charge this 70, let me put it to naira so I can see it well. If we charge this 71,429 to tax at 30%, we're only taxing 2 months, not 14 months. That is why I told you that this figure now will be an adjusted profit following what? Following the accounting period. This is an adjusted profit, but this one is what? An accessible profit. That is the difference between the two. Adjusted profit will adjust accounting profit using tax rules. Accessible profit will do what? Will adjust the dates. I don't know if you get it,
Yes,
but that's
ma'am.
on that base of
No,
assessment.
please go over again. Ma, please go over again, please.
All right, let me take
No,
it again. So now 500,000 is for what? For 14 months. 500,000 is for 14 months. But then our basis period covers only what? 2 months. It covers 2 months. Now, to know the accessible profit that relates to these 2 months, you are going to do what? Prorate by removing 2 months from these 14 months. Now, to make it you understand better, Aisha Kwalekunde o. To make you understand better, let's do the next year. Remember, year 2 says what? The second day after the end of the first accounting period, right? What is second day after that particular date? 1st of January 2020 what?
2026.
2026. Thank you.
that-
To the next accounting date will be what? 31st
30.
31st
December
December.
2026. Now, the year of assessment will not be which year?
2027.
2027.
God bless you. So now, how much will now be the accessible profit for this second year? That is when we're not going to do what?
12.
Another correction.
12 over 14.
God bless you. 12 over what? That is the remaining money that is there. Multiply by what? Our 500,000. Can you see? So now, if you add these two together, if you add it together now, it's going to give you what? 500,000. You see the same money. We are just splitting it into what? Different. So it means that this 2 months accessible profit will pay for this tax in what? If you are doing CIT now, when we do CIT, we are going to talk about the time to pay for tax. So is for new business, give you 18 months or 6 months after the account period, whichever is earlier. So now 2026 by June, o gbọ́dọ̀ sanwó yìí. If not, you are going to incur what? Fine. If not, you are going to incur fine. Same thing by June 2027, you must have paid this money. This is not the tax, so this is just acceptable policy. We are still going to do 30% of this money. Oh. This is not the tax, sorry. When we get to site, we are going to, baby is talking. Oh. Who is baby? Okay, I think the person has muted a mic. I cannot talk much because I also have a baby, but he just slept. So I think, are we good with the new rule? Is there any other question? Ibrahim, your hand is still up.
Yes, ma. Hello, ma.
I can hear you.
Thank you so much for that explanation. I like it.
Please,
But
can
my
you come
question is
again?
that based on that first rule for the first year of assessment, ma.
Okay.
Hello, but you said that the first rule said that from the date of commencement to the end of the first accounting date, and
Yes.
based on the illustration given to us about the second question that the commencement date started from 1st of November 2025 to 31st December 2025. For example, my question is that let's assume that sorry ma, let's assume that the question has stated that the commencement date that the business commenced the operation in 1st November 2025 and the accounting date is August. Hello ma.
Okay. That's another
That
scenario, I guess. So
that
you
the
are saying
August,
that,
but you say that
let me write it down,
okay
sorry.
ma.
So they
Oh,
commence business
okay.
November 1st, right? And
Yes,
their accounting year end is what?
it's August, not
August.
September. Yes ma.
Okay. So let's take that scenario too. So now if you follow the first rule, it says what? From the date of commencement to the end of the first accounting period.
Accounting date.
Let's
Yes ma.
assume the year is 2025 as usual. So date of commencement is what? November 1st,
Yes,
2025,
2025.
right?
Yes, yes.
Now, to the first accounting year end, the first accounting year end is still what? August.
August.
I think August is 30. That will be the
Yes,
following year,
2026.
2026.
Yes.
And the year of assessment will be what? Can you guess?
2027.
2027.
2027.
God bless you. And that's it.
Okay.
So now the
Okay.
following
Thank you so much.
year, year two, follow the route to the core. The second day after
Okay.
August is what?
1st of
September.
September.
September 4th. September is 09, right? 09, 1, 2020, what? 6, 2,
2026. Yes. To
the next
30th of
year
August.
end, August 30,
2027.
27. And then the year of assessment will be when?
2028.
2028.
2028.
Okay. Thank you so much, ma.
That's it. Are we good?
Yes, ma. Thank you so much, ma. Okay.
Okay, okay.
Thank you,
So
ma.
any other question before we proceed? Because we don't have time. We must finish this material today. Ahmad,
Good evening, ma.
good evening.
Yes, ma. Please, I want you to explain how we got to that 14 months. I wasn't really active then.
That's you might have to wait till we solve question because it was a question asked by a particular lady and I have to explain using this
Okay.
illustration. But let me quickly go through for you because this is just one out of three kini and we must finish those three today. So we are saying that 500,000 is the adjusted profit for 14 months. But then this company has commenced business by November. The accounting year is what? December. If you now follow, if we follow this commencement rule, is it that they are fighting for? Okay. If we follow this commencement rule like this, it means that the first year will cover only what? 2 months, which is November to December. So now all you have to do is remove 2 months from what? 14 months, which is what we have done here. If you look at the formula above, 2 over what? 14 times this cell that is here. I don't know if you get how I'm trying to explain now.
Yes, I get. What I'm trying to say is the 14 months in particular, is it from a question or is just
It's not
a
from a question, it's just an illustration.
Transaction.
that was what I wanted to ask. I already understood the concept. Thank you.
I know, no, it's just an illustration.
All right,
Please,
all right.
every other person that has question to hold, what happened with my network? Every other person that has question, please hold on. Let us continue. I'll take question when we get to another particular point in time, please.
Come.
Okay, so please let's continue our commencement. So I'm coming, please. Okay. So I think we have explained the new rule and we all understand. I'm assuming that we all understand the new rule because this old rule is a bit complex and I want us to just calm down and listen quite well. Please, I beg you. Need to, if you are pressing phone or you are doing something, even if you are eating, drop your spoon and listen. This old rule, please. So now, for old rule, the rule is different. That's why it's called old rule. It's old rule, right? And it caused problem. That's why we have to bring in the new rule. Now, old rule says that for year one, the profit will be what? Profit from the date of commencement to the end of that year. Date of commencement to the end of that year. Second year will be profit from date of commencement to a 12 calendar month. While the third year will be what? On preceding year basis. So now, this old rule, year one and year two, did not follow the preceding year basis. Ah, God, we have spent time. Oh, hey. We might have to exceed our 10 p.m. Just because we must finish this material. We have not reached half. So I've talked about year one, year two. They don't follow PYB. Preceding year basis starts from what? Year three in this old rule. Now let's illustrate it. Let's illustrate it using the Excel. Let me give an example. I don't want to use this one because it will confuse you. Let's use a different example now. So now let's say ABC. ABC Limited commenced operation in, let me put February, February 02, right? And they decide to adopt June 30 as the accounting year end. That's what they have like decide to adopt. They don't want December and December àwọn ò fẹ́. It's 30 June that they want. Let's now follow the old rule to compute their words. Let me write old rule bagada so that somebody will not come and be asking me question later. Oh, new date, sorry. Old rule. Let me put it in bold. Not say not see it. Old rule. Let me save this thing so I can give you guys to I can give you guys later on. Anything can happen. Let me say basis of assessment. Okay. So that you guys can have access to it. That's for those who have paid for material. So now, following the old rule, year one says from the date of commencement to the end of that particular year. And the year is 20, I don't want to 2025. Let's use 2018. Yes. So yeah, you write your dates 2018, year one, 2019, year two, 2020, year three. Now the basis period will not differ because we are following different rule. The year one says date of commencement to the end of the year. When did they commence business? February 2nd, 2018. Abi? Then towards the end of the year. To the end of the year. Sorry. To the end of the year is what? 31st December 2018. Now, the second rule says date of commencement to a 12 calendar month. See, that 12 calendar month here, èmi ò kí ń jẹ́ kójú tì mí o. I'm sorry for those that don't understand Yoruba. I might be code missing at times. I don't used to feel ashamed to take my pen and write January to February. But I used to write it out. Anybody that wants to laugh at me, the person is not paying my account fee. Let the person laugh. So let's write it out so that it can be easy to like count the 12 months that I want to count, because I'm very sure some people get confused if I don't write it out. So we have January, February, March, April, May, June, July, August, September, October, November, December. Good. When did the business commence? February. Emma Bami Kalo, please count with me. Oh. Now let's count till we have 12 months. So that we can know what 12 calendar. When did the 12 months like stop? February 2. That means we are counting February. Remember, February 2, February 1 is different from February 30 and February 29 and February 28. Sorry. If it is February 28, February is gone. You are not supposed to count February. I don't know if you guys are getting it.
Let
February 1, February will be included because February is yet to start when you commence your business, or February just started. But if it's February 30, sorry, February 28, January 30, May 31st, that means that particular month is not included. Please, date is one of the ways taxation can be confusing. You need to understand your date. That's why I'm trying to make this as simple as possible. So now let's count. Sorry, please, give me some minutes. Sorry. I had to attend to something. So yes, I was explaining how to count 12 calendar months. So now we are counting from February. Please follow my cursor. Can you see that green and this green thing? You follow it.
yeah.
So February 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Please, the 12 months up at what? January. So it means that following the second rule that says date of commencement to 12 calendar months, date of commencement is the same thing as this one. Let's copy and paste. To 12 calendar months to now be what? 31st of this is still going. All right, sorry for that. But please, do we understand this one? Do we get it? I know it's a bit complex. So now let me complete it before I even ask for a question. Please, I'll not be taking much questions. But probably just one or two questions. Then we move because we have change in account period and utilization to do today. We have to finish today. Like God's grace. We are not carrying this topic to next class like God's grace. No, we are not. So that's the second year. Date of commencement 12 calendar month. If you notice, this thing is not following PYB. Is it? No, it is not. That's Oju. The third year now saying you are going to follow PYB. Yeah, this is that my course is the account year. 30 June. 30 June is when the account will end. Now, when will the account start? When will the account start? It means that in this
May,
our January to December that we put down, this
May,
space where my green May, yes, you are correct. But let us help other people that might not know how to count it. Let us help them to what? It's not even May actually. You are not correct. But let's count together so we can see. Abby, so you can see. If the what I used the arc that I used to use is that how can I say this? If this is the end, the beginning will be in front. If this is the end of the account period, the beginning will be in front. If you finish your account period December, you start the new accounting period January. If you finish the accounting period in April, we start the new accounting period in May. Okay, I'm coming. So if but to confirm, we can count together, right? This is when the accounting period ends. So let's count backward till we have 12 months. We are counting backward, remember, we are going back. So from this June to June, we count June. Oh, remember, June has finished and 30 June. So that will be 1, 2, 3, 4, 5, 6. Then we go back here. 7, 8, 9, 10, 11, 12. Do you get it? Now, July is when our counting end. That means this, uh, I don't know the thing that I can use to, I need arrow, but I don't know how to bring arrow here by. Okay, let me put start. If the accounting year end to finish by June 30, it starts by when? July 1st. Do you get? Which means if you are following PYP, preceding year basis now is going to be, no matter that our year is 2020, preceding year is now going to be July 1, urgent. Then I'll come and take your question on this Oju. I know it's going to be a bit confusing, but I'll explain one more time. Then I'll take your question. Please, you have to listen carefully because after that we are moving. We solve one question so I can tell whether you guys understand. Then we'll move to the next one, which is changing accounting dates. Give me 10 minutes, please.
It's a kind of-
She requests for 10 minutes. I guess she'll be back now.
Good evening, everyone. Please, are you guys on break?
I guess
Something
with
like that.
permission
Yes,
for
sir.
Yes,
Yes, sir. Yes, sir.
10 minutes.
It's on
requested for 10
the
minutes.
outcome of the program. Yes, we are
Okay,
still
okay,
enjoying
okay,
the
okay.
class. We are
That's
still
fine.
enjoying the
That's fine.
class, sir. Thank you so much, sir. Well,
Okay,
sir.
okay, that's fine. Yeah, you're welcome.
Thank you, sir. Thank you, sir.
Please, before you go, please, I want to ask a question. Please, now that we are on break, let me just ask this question: Is it can we be able to have the video of this class? I noticed that the first transition we had, we never, I didn't see the video, so that I can go through it again and learn. Please, are we going to
Okay.
have the video of this one?
Yes, yes. Yeah, the class is recorded. All right,
Okay,
you get
because
it.
okay, thank you. Because some of us are still waiting till Monday before we will now pay for our material. So it
Okay,
will be
okay.
easy for us to look at the material and listen to the recording. What
Yeah,
about the
I get.
first class? Is it possible to still get it?
No, 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 not at all. The
Oh,
class was
okay.
not recorded, and I
Oh, okay.
apologize for that.
Oh, okay, okay, no problem.
All
Maybe
right,
one day you just tell our lecturer to just take out time to go through like maybe 15 minutes or 20 minutes recap on that first class. It will be very helpful because trajectory of every subject is the key, kind
okay, okay.
of.
Now,
According to her, she was saying that this is a review of the last one that was done. That was
Uh-huh.
what she said when this started. Yes.
Oh, okay, okay,
So
okay. Thank you so much.
I believe that this is a replacement of that last lecture.
Oh,
Thank you.
okay. I didn't hear that. Okay, thank you so much.
Thank
All right, I'm back, guys. Thank you so much. So, I think I had you guys discussing on something. What did I miss?
Well, she was talking about the recording of the last class, and
Oh,
Mr.
if you
Ibrahim
have
said it was
today's recording, you are good to go.
for different record, and that is what he said. Thank you.
Thank you very much. So, let me recap the old rule. I'm sorry. I think after recapping the old rule, I'll take just two questions, just two, then we move. Okay. So now, like I said, the old rule, year one, year one says what? commencement date, I will use commencement date as CD to end of the year, 31st December. Let me write that for December info. Sorry. Thought it will change it. 31st December. That's year 1. Year 2 says commencement date to what? 12 calendar months. Sorry, year 2 is supposed to be 2. Year 3 says preceding year basis. And that's what we have followed in this place. That's what we have followed here. So remember, our question says APC Limited started business what 2nd of February, and the accounting year ends what 30 June every year. Now, from the 30 June, we're able to deduce that if the accounting year end should end 30 June, that means it began what 1st July. I think I showed you guys how to do that, right? All you need to do is count backwards to when 12 will stop. But like I told you, my own way of doing it is if the accounting year end should stop in a particular month, the month after it is when it will start. That's my own arc. So now, following that rule now, to solve this question, we want to write the basis of assessment for the first 3 years, right? The first year says commencement date to 31st December. That's what we have done. Commence was 2nd of February. So 2nd of February to what? 31st December of that particular year. And in this new rule, our basis period dictates what? Our year of assessment. But this one, what did we do first? We first wrote down the what? Year of assessment. Because méjì ò papọ̀. The only one that will affect is what? Year 3, because year 3 follows what? Preceding year basis. So now, from date of commencement to what? 31st December of every year, of that year, sorry, 31st December, date of commencement to what? The end of that particular year. That's for 2018. Now, date of commencement to 12 calendar months, which means a whole year, regardless of when that year will end. They don't want to know the date or the months. The share should be a year. Now, the third one now says preceding year basis, that is follow the normal accounting period on what? PYP, because the third year, they have assumed that you are now what? You are following the existing business, you have joined them, you're no longer what? A new business. That is it. So if you now notice this one, February to December has been 2 times. To May 20, is it from January to May? It's not January. From July 2018 to January 2019 has been taxed twice in this 3rd year. That's what we call overlapping. When you are taxing a particular amount to tax more than once, you are charging it to tax more than once, is what we call what? Overlapping. Overlapping. It's called overlapping. So that's why the rule had to change. Because it's just a good. So I'm taking just a question. Do you have any question before we move? We are moving. And as we move, before we move, please, everybody, do illustration 1. Everybody do illustration 1. Give me the first 3 years of assessment. Use the new rule first. We already do illustration 1. The second one, we are going to use it as practice question. After illustration 1, we are moving to the change in accounting date. So everybody in the comment section, use new rule and give me the first 3 years of assessment and basis period. For this XYZ Limited commence business on March 1st, 2020 and make up account to that 1st October each year. So everybody now, the comment section, I'll read it. So use new rule. I didn't say old rule, new rule. While you are doing that, any question? No question, okay? So now let's read what
Ma, I
people have in
think
the
that
comments.
was what we posted.
Ma, please,
Eh?
the question. I want to write it down. The question.
Okay, sorry. Let me help you to copy it to the comment section. So I've pinned it. You can always see it in the comment
Excuse me,
section.
ma.
Okay.
I think that was the work you gave us to do, which we posted on the platform.
No, that's the second one, not the first one. We did this one in class.
Okay. Thank you.
I can't see the question.
It's in the comment section. I pinned it in the comment section.
Okay. Okay.
Use new rule. Use new rule. Nobody has dropped answer. What happened? Oh yeah, oh, what is happening? New rule is simple. Supposed to take you 2 minutes. Hmm? I'm trying to respond to messages in the comment section, but I think I'm unable to. So let me just make my comment here. TY would have been correct, but check your ear. Your ear is fucking you up. Check it. Then, Oluwakemi, you are wrong. Aderanti, you wrote just 1 year of assessment. Now I said 3. Okay, Oluwakemi is writing this one by one. But that your year 2 is wrong. Check your year 2, it's not right. Then Suleiman, you are right. Aderanti, year 2. I'm trying to see. Okay. I think year 2 will be 11. I'm coming, please. So year 2, 11, 20, 20, 20. Yeah, this is correct. Oh, this is correct. This one, check your month. Check your month. But your month is wrong. You have been right, but your month is wrong. I don't go use 2020 or exactly TY, you've gotten that. So new rule. Yes, 2021. This is correct. 1 November. But don't write 1 November in your exam. 1/11/2022. The way you arrange it, like the way I did it in that Excel, that's how you write it. Year of assessment, base period. Under your year of assessment, your year of assessment will follow through. Base period, your base period will follow through. Accessible poverty, accessible poverty. I'm trying to let the Excel sheet look as much as your normal workbook would look like. Do you get? But where's your year 3 now? You are correct, Sha. Okay. So I guess by now we already know the correct one now. Said Aruna, you are correct. You are correct. So I guess we are good to go. So please practice with the second question. I could not check the ones people were posting last time, but the class rep, I gave you an assignment to, you did not get back to me. Class rep, mama ti má bẹ̀rẹ̀ ọ̀lẹ láti sìn yìí o, don't start laziness now o. You have a long way to go. I gave you assignment, you not do it. No problem, sha. But let's continue. So, like I said, let me help you to copy and paste the second one. So, what we'll do for this one, I don't want us to do it as an assignment because I gave it as an assignment before. As I'm explaining the change in accounting date, Abby, don't let me do it that way. Oh God. Oh yeah,
Ma, please, my own last one.
let's do it now. Please, can you guys hear me? I think I lost connection for a while. Where did I put my phone, sir? All right, thank you for reacting because I wasn't sure. Okay, so have you guys done it? Nobody has submitted. XY Limited commenced business 1st of April 2020 and makes up accounts to November 30 each year. Determine the basis period for the first 4 years of assessment. Let's make it 3 years, please. This one, we're going to use both new rule and old rules. I'm taking my time because you need to understand this thing. I really need to do the remaining two. Hey, only God knows when we leave. And my phone battery is going down. Okay, Winifred, thank you for being the first person to submit. 1 minute. You guys, you are right on time. So year one. And I'm even praising you. You are even doing the previous question. You need cane. It's this one that you should do. This one. This one in blue. Let me pin it. Oh yeah, it's this one. New rules, yes, use new rule. Use new rule, not old rule. Let me go and pin the first one. Oh yeah, I'm waiting for you guys. There's no time, please. I don't want to start this topic again. No. It's simple. All right. So 1st of April to 30/11 2020 what? Okay. Then 12 to 11. Perfect. Zainab Lawal. Perfect. In fact, let me give you clap. I think I can clap here now. Where will I clap? Okay, here it is. Where is the thing? Let's clap. I clap for you. You tried. I like that the first answer that came in is correct. So Zainab Lawal is correct. She's absolutely correct, following the new rule. If your answer is the same as Zainab Lawal's answer, you're correct. This is also correct. Job piece, well done. Sulaiman, let me see. You're correct, but you did just 1 year. Why not? No, TY. No. Nei. That's wrong. Don't let me remove my teeth. Precious. You're correct. I guess it's okay. It's okay. Yeah. to the bone of contention. Old rule, 1 minute. Old rule. Let me move on to the question so you guys can see. 1 minute, old rule. The first 3 years. The first person that get this thing, I'll clap like 1,000 clap for me. Oh yeah, oh yeah. Oh yeah, there's no time. Oh. Oju. Let me type Oju. Now you guys show Oju. So do Oju now. After this one, I expect Oju. So like, why you typing one by one now? You got it, but you did just 1 year. Let me clap for you, small clap. Let me give you one more. You have tried. You got the first year. Oh yeah, now continue. Okay. Hey, Maureen, this your name. They can remove my teeth, but you know that. Let me see. Perfect. Perfect. The clap is for Maria. Let me clap for you. Yay. Marin Chisobam Aguagu. I hope I called it right, Sha. That's perfect. Yeah, you got it right. You got it right. Date of commencement to the end of the year. Date of commencement to 12 calendar month. Then preceding year basis. Marin got it right. Let me see TY. End of the year, 12 calendar month. No, this your third one is wrong, TY. You got the first and second one correctly, actually, but your third one is wrong. Stanley, your own is the old new rule. It's old rule I said you should do. This your 2020, Aderanti, your 2022 year of acceptance is correct, but your base period, yeah, accident. Your base period, you have changed your kinina. I think the thing is November, Abi. Let me go and check question again. More pay. It's November now. You have think your 2022 have changed it to January. Aderanti, your own have changed to January. That last one is wrong. Okay, please. If you got the same thing as Marine, it will be end of the year backwards. Yes. So that no, it's not the end of the 12 months backward. You are going to be following the accounting year end for that year 3. You follow the accounting tenure. So if accounting period end November, of course it starts December. So it's going to be December to November, December to November. Do you get? December to November. Please, I hope we are good. We need to move, honestly. We need to move. Yes, you guys are getting it right. This person, you wrote December to December. No, Rara, Umba. This one you wrote February, Rara. No. You got the first one right. Got it right. Why are you writing February? It's not February now. Why did you omit March? March is any. Stephanos Yakubu. No, that your second one is wrong. Okay, I think I will stop here. Let's continue, please. Let's continue. My cough is breaking out before we get to a point where we'd have to stop. So now let's move to change in accounting dates. We have spoken about commencement, and I believe that we understand commencement, both new and old. What I would advise is you guys should practice as much question as you can. I think by the time we start CIT, I think I have a practice question there that has to do with this, but you can't wait till then. Still, be forming dates by yourself and use it to practice. It's as easy as forming dates yourself, right? So now change the accounting dates. When the company changes the accounting dates, FIRS follows a specific procedure to compute accessible profit. But before I move to the procedure, why would the company change accounting dates? Sometimes it's just for tax planning. Tax planning is like you want to reduce the tax that you will pay. And you have calculate it in your head that if I change, I'm using January to December before. If I change to June to July, I'll be July to June, sorry, my tax is going to be smaller. At the FRS, I want to burn. They are clever. They know that you want to run away from, you want to evade tax, or you want to avoid tax. Then they know, So they also have devised a method to ensure that they get the maximum amount that they can get from you. Hence, this particular rule, right? So we have what? Let's say 6 rules. The first thing is to identify the first year of assessment when the change occur, or identify the year of permanent change. The year of permanent change. So the year of permanent change is what I've written here. The first year of assessment when the change occur. Let me go back to my Excel sheet to explain this, because I know it might confuse you guys. Let's go back downwards. All right. Let me make this one and write what? Change in accounting period. So it's easy to know when we started changing accounting period like that. So everything after that was changing accounting period. So what are we saying here now? We are saying that a company that has been using 31st December, 31st December every year before, now decide to start using June 30 every year. Now, the first rule says that you should identify the year of permanent change. Which year did they stop using December and they use June? This thing is easy to identify. How? Just look at the key that they gave you, the question that they gave you. In which year did the year ended become June, or period ended become June and not December? In which year or period did no? There have been, it's like when you're having December, period ended December, period ended December, one June just come in the middle, June. Do you get? Which year did this first June come into place? That year is your year of permanent change. When we treat question, I think you guys will understand better. So that's number one. You identify what? The year of assessment when the change occur, or the year. I think this it's not that year that you identify will be your first year of assessment. Yes. That year identified will be your first year of assessment. We are going to get it better when we treat question. So now identify the next 2 years following the year of assessment. So you have identified this year. The year that you have identified here, let's say the year is 2025. So that 2025, let me write this thing again. Year of assessment, I think basis period. Let me link basis period together. I think then we have what? Accessible profit. Okay. So now the year that you have identified for this one will be the first year of assessment that will be here. Let's assume that it is 2021. Now, after 2021, which year do we have next? 2022, 2023. And that's your next 2 years. It's as simple as that. That's the next 2 years. Then compute accessible profit using old accounting date for the 3 years. For these 3 years of assessment that you have identified, these 3 years, use the old accounting date, that is this December. Use it first to compute your what? Accessible profit. To compute accessible profit. After you have done that, what do? Add it together. Do you get? Add them together to get this figure. Using what? This one now is what? Old accounting date. Then you now do another one, which is what? The next one. Compute accessible profit using the new accounting date for the 3 years. You do another one, the same figure. Money is the same figure, the same year, but different figure. Why? This one is based on the new accounting date. But what would the tax authority now do? That is the what? This one is to add up the new dates, which is what we have done before. This is the addition of the two. Add all this one together, add all this one together. What would they now do? Select the higher of the two. The tax that you are going to pay is going to be on what? The higher of these two. If this one is higher, you pick old date. If this one is higher, you pick new date. After this one, you can now start using your new date and you'll be a normal existing business. Let's check example. Let's check example. Okay, this is one example. Please, are we here?
Yes, yes.
Okay. Okay, I even have illustration here. So let's go. Richie, please mute your mic. Who is that? We don't have time. Oh, please mute your mic. You want me to mute you? Thank you. So, Richie Test Limited for many years have prepared their accounts to December 31st, but in 2020 decided to prepare a 6-month account to June 30. To June 30. Okay, let me read the question again, or let me paste it on the pasting it on the group would not do anything. December 31st. So this is, let's delete this. Now, their normal accounting period is what? December 31st, right? For the Richie Tasty. Now we are talking about Richie Tasty. Let me put this down. Richie Tasty. Normally, Richie Tasty would use what? December 31st. But they have helped you in this question. Why? They gave you your year of permanent change. They gave you for free. They did not give you problem by telling you to look for your year of permanent change by yourself. So they have done you a lot of what? Help. Still now, they said in 2020, they decided to prepare a 6-month account to June 30. So now, June 30 no dey wan be by. That's a coincidence actually. So June 30 is their new date. This is what? Old date. This is new date. The required now say this is why OR means you are required. You are required. Identify the year of change. I've done that for you now. Under your year of assessment, year of change is what? 2020. They have said it in the question. It's fact, the most straightforward question I've ever seen. I don't know why I picked this question for you guys. So identify 2 years after. It means 2 years after is what? 2021, 2022. Abi? Then compute the basis period using the old date and new date. Now let's go. Using this old date, what is the accounting period? Now, old date accounting period will be, if the accounting period is 31st December every year, it means it's from what? 1st of January to what? 31st December. This is what? Old date. Now, for the new date, if it will end June 30, let's first go to the end. June 30. When will it start? July, automatically. July 1st. But this one says what? You should use, let me write old date here so you can easily old date. Nice. We want to compute acceptable profit using old date, which means regardless of the fact that in 2021, 2022, they did not use old date. The rule says use old date for the 3 what? Years of assessment. Year 1, we are looking at what? 1st of January 20 what? 2019. Oh my dear, let me just write 19 to 31st December 2019. Remember, it's preceding year basis, please. It's PYB. So this one is simple. Just follow again. 2021 year of assessment. 1st of January 2020 to 31st, sorry, I wrote 21, 31st December. Ah, I'm not supposed to write the date first. The date first, sorry. That's the my laptop settings. I'm supposed to write month first. Okay, sorry. 2020. Because the year of assessment is 2021. Then same thing. I think this thing supposed to pick the pattern like that. I'm using Sata to teach you guys how to use Excel like that too. Okay, this is it. Simple as ABC. So whatever you now get in this accessible profit, you do what? You add it together. Let's assume that the addition of this one is 550,000. Let me put comma so that you will not be confused. So now this for old dates. Now let's do new date. New dates. The rule says you use old dates, then you use what? New dates. Now, year of assessment is still the same. Let me first finish this thing. I'm just remind me that I penned something that I want to say. My throat is starting to itch. Okay, using new date now. Don't forget this is the new date too. That's why we look for it before we start. So using new date, we have July, that is 07, 01, 20 what? 2019. To 30 June 2019. Because 2020 as year of assessment should not show. Remember this change in accounting date, the company that is changing the accounting date is not a new business, so it's an existing company. The only reason why it fell into this kini is that it changed the accounting period. And if you check the question here, it said that designed to prepare 6-month account, which means assuming we have real figure, we are going to be prorating a lot in changing the account. So if you don't understand proration, you might have issues here. Don't worry, when we treat the questions that I put down, you will get clearer. Because yeah, you prorate. You might control you add to you add to month, you remove from month. You need to understand how to do that perfectly. Yeah. So now this one, of course, PYB second day after 30 June is what? July 1st, 2020 to 30 June. June is this. June 30, 2020. So now this will follow the pattern. This will follow the pattern. So let's now say that this new one gave us 500,000. So this is total for using old dates. This is total for using new dates. The rule says what? That's authority will pick the higher of the two. So before they come and pick for you, Kukuma pick for them. So now back to what I wanted to say. This that we just did, everything that we just did here, that I just highlighted on this system, is everything here is workings. When we are talking about changing accounting period, all of this that we just did is workings. Workings lunch. Let me put it like this, carry it like this. They are what? Workings. Now your correct answer, Gogo. Let me copy. But I would have to remove the old date. So yeah, let's remove old date. After you have finished the workings, you now come here. Which one are you picking? This one will be old date. You now come and write everything that you wrote here. Copy. And do what? Paste. Say now. I finish your working. So this one, let me write it there. Workings. Workings new. After you have finished this one, you now write it underneath. The tax authority would choose the higher of the two, which is the old dates. Write it in your workings there. Oh. So when they come and see this that you've picked old dates, they know why you decide to pick what. It's as simple. Just the accounting period does not have new data, be new rule, be old rule. That's just the rule. Oh, I'm sorry. Whenever I speak Yoruba, I would always interpret immediately afterward. It's because I'm used to code switching. That's why. Is 30 June not supposed to be 30 June 2020? I did not notice that. Which one? 30 June 2020. Which one? I don't know. The one you're talking about.
Sorry
Okay.
for unmuting my mic. I mean
Yeah,
the new
you're
date.
correct. You're correct. You're correct. 2020. That means that 2019 will be here. Is this one that is wrong? 2018. This will be 2018. That's how it goes. Remember that change in accounting period follows PYB strictly. It follows PYB strictly. The year your basis period must not show in your what year of assessment. Do not forget that. So it is not this one that is wrong. It's this one that is wrong. So it means that this one too is what? It's not 20, but it's what? 19. This one is not 21, but it's what? 20. I guess we are good now. Thank you for bringing that to my attention. Hamad, thank you for that. Any question? I think we want to move to cessation, which will be our last discussion before we treat at least one question more. At least one question. I'll check the question that we can treat, then we call it a day. So no question. Are you guys sure that you don't have question on changing accounting dates before we move forward? Okay, thank you.
For me, no
Now
question.
let's move. Cessation. Cessation has two rules too. But before I move to the old rule, because I don't know why I wrote the old rule first, let's talk about the new rule because I want the new rule to stick. The old rule, I'm just teaching you guys the old rule because um I'm teaching you guys because I don't want a situation where you find yourself in the exam or and you would need to use the old rule but you don't know it. I don't like to give that. I don't like to create things like that. I don't want that to happen. So that's why I'm teaching you guys the old rule. The old rule is complex and annoying. The new rule is just simple. So now, new rule for cessation. What is cessation? That is when a business no longer wants to operate. They want to close shop. That's just basically what it is. Now, if the business is a normal January to December business, they then decide to close operation and stop operating, like close shop by March, April, or June, or August, or November, any time of the year, anytime. They don't care whether it's 12 months or not. Mi ò ṣe mọ́, mi ò ṣe mọ́ ni. I'm not doing. That's it, final. Right? So the rule now says that for a company that sees business, profits are assessed from the beginning of the accounting period to the cessation date. Now, that is the basis period. Remember that this company was previously existing as an like normal existing company, which is PYB that will be using to assess them. But as at the year when they decide to cease, that year will no longer have a 12-month basis period again. It will be more or less than, so it cannot be more. It's going to be less than 12 months. Now, the basis period will now be the beginning of the accounting period it's just like the opposite of commencement. Beginning of accounting period to the cessation dates. Cessation date. Now, the issue that we now have with this new rule is that your year of assessment depends on when the cessation date is. If your cessation date fall between January to June 30, then that particular date, like that particular year that they cease, will be their year of assessment too. Remember that taxes are payable within 6 months from cessation date. When we get to CIT, you know more about this particular rule. It's for CIT companies. So remember, and our year of assessment is the year that you do what you pay your tax. If they are 6 months fall into that particular year that they cease business, then that year is their year of assessment. But if they are cessation date fall between July 1 to December 31st. If it should fall between July 1 to December 31st, then their year of assessment is going to be what? The following year. Oh, yeah, Kimbolding, the following year. The year of assessment is going to be what? The following year. Please let me illustrate this thing here. Ma, the changes you are making, I'm not supposed to make the same changes for the old date. No, I'm not supposed to make the same changes. So the old date differs. The old date follow normal January to December. See, 1920, this is normal. 2021, this is normal. 1920, 2021, 21, 22. That's how it's supposed to be. This one is correct. It's because the reason why this one is like this is because it's July to June. It's not January to December. That's why it fell into each other like this. So this is correct as it is. So we are talking about cessation. Cessation of a business. Damn, like that. So we are ceasing the business. So now the rule is saying that from what? Beginning of accounting year to the date of cessation. If it's a January to December, let's assume a January to December company ceased operation in March. So let's take it again. Our year of assessment, basis period, assessable profits. Okay, assessable profits. So now, January to December, let's make it 2025, sha. January to December ceased operation in March. And the rule says from the beginning of the accounting period to the date of cessation. When did the accounting period begin? It's very simple. January 1, 2025. Mo ti mọ̀ pé kò ní kọ dáadáa. This thing orí ò pé. January 1, 2025. Okay. So when did they cease business? March. I think March is 30 days, right? March is 03/30/2025. This is it. Now, the bone of contention is our year of assessment. Remember that I said if the cessation month fall from January to June 30, then the year of assessment would be the year of cessation. But if their what cessation date, if their cessation date is from what July to December 31st, year of assessment then would be the following year. This is where we are going to illustrate it. They cease business March, which means they are going to pay their tax in this 2025. As long as you can still count 6 months. If you can count 6 months in that year and the year will not finish, move to another year, is that year that you still pay tax. Is that year that you still pay tax. Now, this is for this question. Let me copy this. Copy and paste. But we want to change the question. We want to change the question. So we are saying that January to December company cease in no longer March, but cease in September. Following this thing that I've written here, I want us to do year of assessment and basis period. So it's going to be the beginning of the accounting period, which is 01/01/2025 to when did they finish the business? September. That would be, I think, 30. September is it 09 or 08? September 30 2025. Now, can you count 6 months after September and still be in 2025? Like, no. It has fallen into what? This category. So your year of assessment is now going to be 2026. That is it for the new rule of cessation. Simple, and that's all you need. You're not doing any other thing. This cessation of the business. This is it. Any question? Is it
Yes,
is
ma'am.
possible we use old rule for change of date? There is no old rule for change of date. So it's just one rule. Change of date did not change anything. It has been the same rule. No changes at all. So there's no new or old rule. What the change of date is that whether you are using your old accounting date or your new accounting date, that's it. So what were you saying, Marine?
Sorry, I was just saying if you can go through it again, please. The cessation.
All right, I'll go
Thank
through it one
you.
more time. Just
Thank you,
one more
ma'am.
time. All right. So the rule says that, let me go back to the, so the rule says here that for a company that sees business, profits are assessed from the beginning of what? The accounting period to the cessation date. Beginning of accounting period, that is the rule. Beginning of accounting period. So now if you follow this date, follow the rule that says beginning of accounting date to cessation, which is what? January to what? March. Now, the rule now say that the year that they will pay the tax will dictate what? The year of assessment, right? Which is normal because that's what the year of assessment is. If they will pay the tax in that 2025 that they cease business, is that same 2025 that you write here. It becomes an actual year basis, right? But if the tax will be like the time for paying the tax will lapse in the following year, then the following year will be what? The year of assessment. So now we have to follow this rule. This one, January to June, the same year of cessation. July to December, the following year of cessation. The year following will be the following year. Then cotton, the following year after cessation. So we will not be confused to after cessation. Okay. So I think, are we good? So we can go through the old rule of cessation. The cessation, which one are penultimate rule? That's old rule. We are going to go to penultimate one now. Don't worry about that. We are going to go to penultimate now. I guess if the month is not up to 6 months, then you use the following year. That September now, September, the number of months that remain in 2025 after they have closed in September is just what? October, November, December, 3 months. It means that we can only count 3 months from 2025 years. To make it 6 months, you will have to move to 2026. Do you get? Because of that, we are going to be using 2026 as our what? Year of assessment. But assuming, for example, the March, if they are since the March, you can still count April, May, June, July, August, September. Only the 6 months, you can still count it inside that same year. Then that same year becomes your year of assessment. That's it. It's as simple as that. I hope everybody understand because this one that this number of call are reduced from 51 abi 61 to 38. Shey people are go and sleep oni. Oh, okay. You guys are sleepy, you're laughing. You better open your eyes. You guys, shey we should stop here. I don't want us to have information overload. Oh. Should we stop here? Should we take the old rule of cessation? Then you guys can take the exercise as assignment. We can start from the assignment in the next class.
Let's continue. Let's continue.
We digest on this one.
Okay, let's finish the cessation. I understand. I understand. Even me, God, the reason why I'm this active because I did not go to work today. I'm a bit under the weather, so I stayed back home. If you know, if you like notice my voice, it's still hoarse or and I have to keep drinking hot water while I teach so I can keep up with the energy. Sorry about that. I understand. So let's just take the old rule, then we'll call it a day. If I take the old rule, you guys will take we'll take one illustration. Let's say illustration one. Then these ones that are here, actually, I'm not supposed to put it there. I just feel like you guys can read it up, whether we touch it in class or not. Then illustration, I've put 20 illustration for you guys. Go and practice it. When we get to the next class, we'll do at least two. Mechi. So you guys go and practice. After practicing all these four illustrations, we'll come to class next time and you choose two out of these four. You choose two out of these four that we are going to do before we start the next topic. Practice. So no, next class is tomorrow. This is what I'm telling next class. I think as if next class is next week. It's not next week, it's tomorrow. So tomorrow, there's no work tomorrow. Tomorrow is Saturday. You cannot say that you're tired from work. So tomorrow, try to do it, okay? That's all. All right, so old rule for cessation. Now, for old rule, you need to understand what we call ultimate year and penultimate year. Ultimate year is the year of cessation, while penultimate year is the year before cessation. So if you cease your business in 2025, 2025 is your ultimate year, while 2024 becomes your penultimate year, right? So now, for your ultimate year, that's the first rule. Identify ultimate year, identify penultimate year. You are going to write it like this. Sorry, I want to come to Excel. Yeah, let me write
Please, what
Oju.
is penultimate year?
I'll write it here. So penultimate year, penultimate year is the what? Is the year before cessation. Cessation. While ultimate is the year of cessation. It's as simple as that. Okay, exactly. I can will not consider that we're tired. I'm trying to, in fact, some of us work Monday to Saturday. Sorry, God will bless the effort. It's not easy, I understand. So I'm trying to go back here. So the ultimate year is the year of cessation, which is, of course, year that you close business. Why the penultimate year is the year before that year. If you close business 2025, penultimate year is what 2024. Now, choose. You're going to write it like this. Now, remember why I went to Excel. Ultimate year. Remember, let me copy this one and paste it. Now, first you write your what? Ultimate year 2024. You write your what? Penultimate year 2025. This, you now remember that just like this change in account period, that you go and do workings, you now pick the one that you want to pick. That's what we do for situation too. You come here. Let me write it down here. Workings. Now, what you now do is for this 2024 penultimate year, you compute based on preceding year basis, compute based on actual year basis, then you now choose the higher of the two. But for the ultimate year is actual year basis, January to what? Date of cessation. No dispute. That's it. So now let me give an illustration. So if the company sees company, let me say June to July company, like their accounting year is June to July company, they ceased operation in let me say June to July. I don't want to use December, my battery is low. December, no. September. Okay. Now, the rule says penultimate year, which we have identified as 2024. Use AYB and PYB. So now using actual year basis, Remember, actual year basis is government fiscal year, January to December. So you are going to be doing 1st of January 2024 to 31st December 2024 compulsorily. Whatever you have here, let's say 20K, write it. 20K no more. Calculate along. Then you are going to do what? Preceding year basis. 2024. Preceding year basis will now follow the normal accounting year end, which is going to be from June. That will be June is 06, right? June 1, 2022 to July. July is 07. July, I think July is 31st now. 2023. Remember, this is PYB. The date here must not show here, which is why we are using 2023 and 2022. So now, if this one is now, let's say 30,000, what do? You choose the higher of the two. It means that this is what we are going for. This is what you just come, copy this one like this, and come and paste it in your answer. Go. This original answer. So this becomes your workings. Then your ultimate year, remember, ultimate year is what? Actual year basis, no dispute. No dispute. Actual year basis, which means you are following January 1, 2025 to date of cessation. When did they cease business? Cease business September. That will be 30. September is 09. 30 September 2025. Bam. That's it. That is it. Are we good? You can't see screen, is network. Oh. Please, are we? Even me, I'm tired. I've not eaten. I'm hungry. Are we good?
Ma, please, the place you copied it to, I was a bit confused when you copied it to the other place. I don't know if
This
you can go through it.
I don't know why it did not change to dates. I don't know what's wrong with it. That did not change to dates. So now, this place is the what? Workings. Let me put it in front of workings. We are talking about what? Penultimate year. Penultimate year. Abi? Having said that, the rule says penultimate year, you have to choose the higher between PYB and AYB, which is what we have done here. The AYB is what? That particular year, January to December, government fiscal year, 20K. But preceding year basis will follow the accounting year. The PYB will follow accounting what? Accounting year. Just as it's going to be what? For last year to be what? This year, which is 30K. Because 30K is higher, will now choose this word PYB, and that's what you come and write in your what? Original answer. I don't know why this one is not changing to the normal thing that is supposed to change to, honestly. But assuming it is this AYB that is 30K, that means it's AYB that you will choose. Please, are we good? You are lost, Tite. Where did you get lost? David, why are you laughing? Everyone, tell me what happened. There's no time more, guys. I don't even think we can. What should we do? Because there's no time. But yeah, let's treat question one. Awele limited. I've even written the answer. Why did I write the answer inside brackets? I don't understand. Awele limited seed operation March 31st, 2020, with a December 31st year end. Would have the following. God, this is the answer. Awele limited seed operation March 31st, 2020. Now let's go. And they have a December 31st year end. Let's go here. Awele. Let's go to Awele limited. Awele limited, right? Now, ceased operations March 31st. March 31st, 2020. Accounting year end is what? December 31st of every year. So now, to now do the kini for our wele like this, what do we do? First, we need to do what is the what ultimate year? What is the penultimate? That's if you are using old rule. Now this is old rule. I'll use old rule and I'll use new rule. We call it a day. Using old rule now, what is the ultimate year? Which year is the ultimate year? That is the year that they cease operation 2020, right? Which is the penultimate year? The year before you cease operation 2019. Now, before you can write anything in your penultimate year, you need to come and do workings like we did. You will do what? Actual year basis. So for actual year basis, it's going to be the same year, 2019. Basis period is going to be what? January 1, 2019 to what? December 31st, 2019. PYB 2019 is going to be what? January 1, 2018 to December 31st, 2018. So now let's assume that this one is 55,000. This one is 45,000. Automatically, what do? Choose higher of the two. Higher. Choose higher of the two. So you are picking what? This madam that is here. Copy this. You get? But for the ultimate year, the rule is simple. January of that year to the date of cessation. When did this cease business? March. It's as simple as that. March 31st, 2020. And you write the figure, let's say 20K. That's it. But now if we use new rule. For new rule, is as simple as what? You are only considering the year of cessation, which is 2020. And the rule says from the beginning of the accounting period, the accounting end is what? December. So the beginning will be what? January. January 1st, 2020 to what? To the date of cessation. The reason why this one is the same thing as the old rule that is above is because of the year end is that December. So don't get confused. So the year ends December. That's why the date is a coincidence. You get? So that's it. Explain the date for that PYB again. Sorry, and those that are tired. The video is recorded. You can watch it again. Actually, I think it's going to be posted on YouTube. Because even me, I'm tired. I really need to get off this call and attend to some other things. So the PYB. Explain date for PYB again. Which one said? Okay, that's sorry. This one, Abby. Yes, the PYB, you are going to follow the normal accounting dates. You follow the normal accounting dates, and you know how it goes now. The year of assessment must not show the basis period. So it's going to be the normal accounting date, but in preceding year basis. I'm not sure if you get it, Sha. My eyes are itching, but yeah, let's go. You guys have tried. So remember, you guys should I don't know how you guys will get this material because not everybody have paid, and I want you guys to try the question. Let me copy one for you. Just that I don't know. Yeah. Let me copy this one. Those that have bought the material, I will upload it. I think I've uploaded it safe. For those that have paid, you will see it. I think I've uploaded it. Go and check. Those that have paid, you see it. But those that have not paid, I've helped you. Copy one question. Go and pay so that you have access to the remaining question. So you use this one to practice. So in the next class, we start with this question. They will pick one more. Those that have access to the questions to look for the one they want me to do. That's what I will do. One more with this. Then we'll start the next class. Next class, we are going to be doing capital allowance. Capital allowance. So come with your eyes open and with your coffee. I'll be your daughter like me. I guess we are going to be saying goodbye here. Yakubu, Lumi, what do you want to say?
Thank you, ma. It's not a question. I'm just trying to get something for us to be more kind of to focus on particular aspect. This whole accounting of a team, whole accounting finance art.
Yeah.
I don't know, maybe have they been trying it for some time, or it's all about the new one that they're doing so that we can focus on one aspect. That's my own
You should
opinion, man.
focus on the new. Focus on the
Uh-huh,
new.
thank you.
The reason why I'm teaching you the old is that can be very funny. I know what my friends have seen can hides. They can be very funny. I just want you guys to know it's for no sake. I just
Okay,
because
thank you, man.
they can come at you from any angle. That's why I decided to teach you. Do you get? So and yes, the class is being recorded. Let me even stop the recording now. See you guys. Yes, I want to stop the recording. Okay.